Take a look at XRP on the 4-hour chart. It's getting dangerously close to a creek. It might come up to test it, maybe even threaten a breakout. And if it's a trap, if it breaks and then corrects right after, yeah, that could absolutely happen. That's the big risk right now. The risk of a crypto collapse. Make no mistake, that risk is real. In the end, the collapse actually happened, just like you're seeing now. We were clearly in a high-risk scenario for a crypto crash. You only need to look at the sharp negative percentage changes across the entire crypto ecosystem. Just look at Bitcoin's massive drop. Ethereum's fall has been just as brutal. Solana, too. And the same goes for other assets like Chainlink. And if you're asking why this collapse happened, honestly, the full explanation is already in our latest video on Crypto Insight. Let me give you a quick summary, because it all came down to whether or not the SP 500 could break through a key structure on its chart. That was the turning point. I'm not going to give you the full breakdown here because you can find all of that in the video, but just understand this. The fact that smart money blocked every attempt to break above that key structure I showed you in the last video, where we went deep into the analysis, was already a warning sign, not just for the US stock indices potentially collapsing, but by extension, and because of their correlation, Bitcoin and the entire crypto ecosystem as well. That's why in the last video, we said it loud and clear, the collapse was right in front of us. Smart money might have been setting up for a crash, and in the end, they pulled the trigger. Now, to truly understand what's happening in crypto, it's crucial to understand what's going on with equities. So let's walk through what we're seeing right now. On one hand, we've got the SP 500 showing a sharp breakout from a wedge pattern. And yes, this wedge can be drawn in a few different ways, but the one we're showing here makes that breakout even clearer. That's why we're seeing the SP 500 move higher. It's normal. In fact, there's still a bit more room for it to keep going up. So now, let's explain the different ways this behavior in the SP 500 is going to impact Bitcoin. The wedge breakout is a big deal. If we take a look at the NASDAQ chart, on one hand, we're seeing a gap, some clear weakness from the buyers, and at the same time, we're seeing the collapse of the wedge. That's important. Right now, price could be reacting to the trend line from that wedge breakout, and it's here after that sharp downward move where we might expect a bit of a bounce, a correction to the upside in both the SP 500 and the NASDAQ. Still, the danger of a larger collapse, both for the indices and for crypto, is very much alive. We've already had the first phase, an immediate drop. Now we're entering a stage where the risk of a much bigger collapse is on the table. So what has to happen now? Well, we've got to let the NASDAQ and the SP keep climbing for a bit. That's okay, but they shouldn't go much higher. In fact, I think they should fall short well before reaching the previous highs, because if we do see them push too far, the most likely outcome is that we end up facing a black swan event triggered right from that trend line in the NASDAQ, and that could set the stage for a very bearish week in the equities market. Here's the takeaway. If we see the NASDAQ and the SP 500 trying to recover to the upside, but doing so without real conviction, if we see they're struggling to push higher, then we'd better get ready for more downside. And I'm not just talking about the indices. Crypto would likely follow right behind them. And to support this view, let's look at the SP 500. If we zoom into the 1-hour time frame, yes, it could still climb a bit more, no problem. But we can't ignore that wedge breakout. No way. Especially not the strength with which it broke. What we're seeing now on the right side of the chart really looks like a corrective move. A pause, a breather after that strong initial drop. So yeah, maybe it makes a retest of the breakout zone. Maybe it pokes up a little higher, but that might be all it needs before falling again. Because if we get a sudden rejection, if we get a fake out to the upside, that's exactly what we were talking about in the NASDAQ. It could trigger some serious consequences. Whether it's a weak move around these levels or a failed push back toward the origin of the breakout, the setup is fragile, and that means danger is still very much in play. Hey, maybe it's just trying to hunt some liquidity. But if we see that it can't climb much higher, then get ready, folks, because equities might be setting up for a serious breakdown out of that wedge. And I doubt any drop that follows is going to be calm, slow, or gentle. No, I'd expect something sharp, aggressive. And now, of course, we bring this back to crypto, because that's what you're really here to see. And look, we can't ignore this. The big institutions, they've been active. We already pointed this out in previous videos. Smart money money had clearly been targeting that one-to-one institutional level. And not just once, but 3 times they went for it, and each time they failed to break above it. That failure already tells us a lot. It shows strong selling pressure at those upper levels, and the fact that smart money took profit right at the median of the channel, that's a big red flag, especially when we've come from what looked like a bullish accumulation phase, and then the price, instead of continuing higher, just snaps back down the way it has. All right, folks, buckle up, because things could get bumpy. What we need to do right now is evaluate whether this touch at the midline is just the classic fake out before a real breakout, because often before a structure breaks, we need to recognize it for what it is, and right now that's exactly what's happening. We pulled away from it just a bit. So yes, it would make sense for crypto to push up in the very short term, only to then go for a real breakout attempt. Now, do we know for certain whether that breakout will actually happen, or if we'll get a black swan event that sends everything crashing? Of course not. No one knows for sure what's going to happen next. But the risk is there. The risk of a collapse was already present back here. And now, from a broader macro perspective, the risk of an even bigger collapse is absolutely on the table. So yes, the risk is real. But now let me show you how we can work with that risk. But before we get into that...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Now take a look at Ethereum. We just came from a bullish climactic move right at the top of a channel, and that zone has clearly been treated as a price ceiling, because from there we got a sharp and aggressive bearish impulse, really striking. Now, breaking through a key structure by just diving off the top like it's nothing, that's not something you see every day. Sure, it happens, but it's rare. It makes a lot more sense to see some kind of reaction around that structure before we even start thinking about a possible black swan event. And eventually, yeah, we'll need to talk about how we might end up slamming into a defensive zone, but not yet. Right now, let's stay focused on the bigger picture, the implicit risk we're seeing in the markets, and not just in crypto, but also in equities. The risk of a collapse. We're always talking in terms of risk, because if you look at XRP on the 4-hour time frame, it's honestly hard to believe smart money wouldn't at the very least try to come down and test this structure. That's the point. I'm not saying a full-blown crypto collapse is guaranteed. We don't know. And if you do know, please leave it in the comments. If you're absolutely sure it's going to happen, or absolutely sure it's not, then let us know. Because if you've got that kind of certainty, we'll all go mortgage our houses and follow your lead. Look, pay attention. After this bearish impulse in XRP, we can see how price starts to follow it with a channel and now with a range. And what we're still missing here, honestly, is a proper bearish climactic move, some structure. That's why it makes sense to just wait and let the market keep dropping for now. Keep in mind that for the immediate short term, for the moment, when this video is published, we expect that the price has already pushed a bit higher. Maybe even after the video goes live, it keeps going up slightly, or it might be right on the edge of starting to drop again. We do expect some kind of move to the upside, yes, but it shouldn't take too long. The key is to look for that climactic action near that zone. Now, this move alone is already a breakdown, of course, but the real danger, that would be losing this key defense zone, because if XRP loses that zone, then the collapse could get brutal. We're talking serious, aggressive downside. But let's take it one step at a time, because right now, take a look at what Stellar is telling us, and to be honest, Stellar is already giving us an early warning, a heads up that a crypto collapse might be coming. It is what it is right here. We've got a key defense zone, and we've already tolerated one fake out, one trap, which in the end is part of an accumulation process. After that, the institutional players came in and defended the zone. They defended it again and again. And listen, they can defend it as many times as they want, but allowing another trap, that's no longer acceptable. Not even one more, which means that if this zone breaks down, if we lose this level to the downside on XLM, on Stellar, then its price will most likely take a hit. And if that happens, then you can expect big Bitcoin, Ethereum, and the rest of the crypto market to follow suit and just take a look at Bitcoin's ultimate proxy, MicroStrategy. It tried to break out above a creek and failed. That failure has now led to a drop, and normally in this kind of setup, the next move is to break below the range. What we're missing right now is a bearish climactic move. Now, does that mean the end of the world is confirmed? No. Are we entering a high-risk environment? Yes, but nothing's confirmed yet. What I do expect, though, is that after a small crypto rally in the coming hours, we'll see some sharp drops in price. So now, let me show you on an order flow chart exactly what Bitcoin needs to do. Here we're looking at the 1-hour time frame, and we can see Bitcoin's sharp and aggressive drop. What stands out are these clusters of heavy transactional volume, mostly concentrated around the $106,000 price level. What does that mean? Well, it means it could be smart to let Bitcoin keep pushing up a little more, just like I mentioned earlier, because we'll want to see if that zone becomes the point where the next leg down starts. And now, take a look at Ethereum's 1-hour chart. Here's where the crypto drop is clearly visible. Look closely at those selling clusters. They're giving buyers a hard time right now. But really, our focus is on letting that pressure build up until these buyers get wiped out completely with a big burst of momentum. But with those clusters on Ethereum, what we're waiting for is a potential opportunity, a setup that shows us prices ready to keep falling. I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. And what better time to do it than now? Our friends at BitUnix have set up an exclusive promo for new users where they'll cover up to $100.00 in losses. So if this is your first time trading and you're looking to join the Crypto Insight Premium Telegram channel, you might want to take advantage of this safety net in case of potential losses. Remember, BitUnix is an exchange that doesn't need a VPN to be accessed from anywhere in the world. To make things easier, I'm leaving you the BitUnix promo details and the Crypto Insight Premium access form in the description and pinned comment of this video. Now tell me, what do you think? Do you believe Bitcoin and the crypto market are heading up, or do you think we're going lower? Drop your opinion in the comments. And if you enjoyed this advanced technical analysis, give the video a like, subscribe to the channel, and tap the bell so YouTube notifies you of future uploads. Best of luck with your trades, and I'll see you in the next one.